it costs. Yeah, I hit the ground and it go off. Yeah, hit the ground and it go off. Yeah, run it. Ooh, I really feel it's my time, think it's my year.
Let's go. Good morning, everybody. Welcome back to the morning show here on Stock Market TV. Spencer, Steve, JC, Alfonso with you as we are pretty much every single morning. A lot going on today. We got some earnings. We got some activist investing. That's always fun. Some activist letters, and we'll talk about that. Bull market behavior. We'll talk more about that. As far as the guest goes, we'll have Kenny Glick on and his usual spot, 8:50. A new guest today. God, I love new guests on this show. Douglas Boneparth from Bonafide Wealth. He'll be on the show at 9. Very excited to have him on the show. He's a tremendous follow on Twitter. If you are not following him, you really should. It's Tuesday. We'll have Pat Donawilla on the show from the Chart Report, and that is what I got going on. So good morning, chat. Let's get the show on the road. Hit the thumbs up if you would be so kind. I would appreciate that. Lego.
All right. Who's hungover from the conference call last night, huh? This guy. Man.
How'd it go?
I woke up this morning, I got hit by a truck. 150 charts. We got some good feedback. We did something that we've never done before. Usually I don't go through the whole process. I always show the results of the process, the things I find interesting that stand out, the biggest trends, all those things. But last night, we actually went through the whole process. We went through every single sector on a market cap weighted basis. We looked at every single sector relative to the S&P. We looked at all of the equally weighted sectors, and we looked at all the sectors small caps and just kind of went one by one. And I really think it gives good perspective as to where the market currently is, because if you take any one data point or any one or two things that you might send out, be like, oh, that doesn't make any sense. When you actually take the time to look at what the market is doing, it actually makes perfect sense, doesn't it?
It's great exercise. The sector universe is probably the best one, probably my favorite.
Yeah.
What did you find? What were the big takeaways?
I mean, it was quite obvious that the biggest takeaways were these big range-bound markets going back to 21, 22 highs, right? And then you've got your groups that are above those highs, right? Completed their bases and are above those highs. Things like market cap weighted technology, market cap weighted industrials, small cap industrials too, small cap materials, right? There's a bunch of different groups that have already completed those bases and are off to the races. Then there are those that are still working on getting out of those bases, like market cap weighted healthcare, market cap weighted financials, market cap weighted materials, equally weighted S&P 500. I mean, there's a lot of them that are like right there, kind of hanging out at those former highs. And then you've got those that still have room to go to the upside. Things like consumer discretionary still hasn't gone back to those former cycle highs. The relative weakness out of REITs and UTs and staples, perfectly normal type of underperformance for bull markets, right? Like, but I think it really helps put things into context. Like, if you're one of these people that are like, this doesn't make any sense, how's the market doing this? It's a travesty because of the unemployment and the national debt and whatever conspiracy theory you've decided to pick for yourself, because there's plenty of them for you. But the one that you've decided, I think that by actually looking to see what the market is doing versus like convincing yourself of these like silly stories, like you're like Mother Goose or something, I think is really valuable, because it really helps put things in perspective. So you can see that what the market is doing actually makes perfect sense. If the market wasn't doing this, that would probably be weird,
How about this monster breakout to new all-time highs in the small industrials?
Yeah. But we've seen strength out of small cap industrials since the beginning.
Yep. but this
right?
is
It's kind of one of those
confirming-
things where like, well, small caps are not participating. Yeah, maybe your small caps are not participating, but plenty of small caps are participating. In fact, Strazza, yes, small cap industrial has been making new all-time highs. Yes. But if you look at the minor leaguers report, which dropped like it was hot yesterday,
Yeah.
go back months and months and months, and the minor leaguers report is all small caps, and every single one on those lists is at new 52-week highs. And this has been going on since last year. So there have been plenty of small caps working, just because the small cap index that you choose to focus on, because you're cherry picking whatever's going to fit your shitty narrative that's been wrong,
JC,
it's loaded up with biotechs and regional banks. Right?
They only have two options.
Who?
Our universe is not an index, so it's not really like people are choosing. You got IWM and you got the S&P 6.
Yeah, but they're choosing to pick an index and then closing their eyes in terms of what's driving those indexes. Like, oh, like pay no attention to the man behind the curtain, you know?
I guess. I mean,
No, you know that that's true, Strazza, because you yourself have been in small cap stocks that have been working out very, very well. You've been on here talking about these small cap stocks that have been working out very well. I've been in them. We've been talking about them religiously.
you
Just
know,
because those indexes aren't outperforming mega cap tech doesn't mean that small caps are not working.
yeah, and you don't have to buy the index, and you shouldn't buy the index, especially when we're talking
true.
about small caps, right? Like the index, index investing probably usually fine in the large cap world. Recently, it's been fantastic, right? You're beating pretty much anything else you would have done if you're just in the Nasdaq for this cycle. But when you go down to small cap land, it's just not the case. You almost never want to be in the Russell 2000 because the majority of those are terrible. You don't have the Apples and Microsofts and Nvidia saving the day for everything else. The whole dynamic is different. So IWM definitely not built the same way as the large cap index.
Small cap indexes are like betting on the Florida Marlins, right? They're always getting rid of their best players. Like, that's not what you want, right? Can you throw up slide 2 there, Spencer Israel? You see what I did? That little baseball reference for you.
That was a good A+ analogy, JC. That was very good.
Sometimes you got it. Sometimes you nail it. Here is the small cap universe. We call them the minor leaguers. These are stocks between $1 and $4 billion in market cap. Any sector, any industry, any country that trades here on the United States, of course, all making new 52-week highs. Every single one. And by the way, the list could get longer, but we just,
So are you picking up what small caps are screaming?
Dude, ripping, bro. Ripping. Can we do it? Can we do a little state of the markets, please?
Yeah,
yeah.
I need trading view for 1 second. Stop.
Go ahead.
All right.
Wait, I just wanted to add one quick thing about the call last night. I did something I'd never done before. I knew I was not going to be home for the first half of the call, so I plugged in an earbud and went about my business. And so the first half of the call, I didn't have visual, just audio. And I wouldn't say I recommend doing that, but I will say it was definitely a different experience. And I was much more tuned to what JC was talking about because I didn't have the chart to not distract me, but you know what I mean. So
you were listening to the call versus watching them, and you actually
correct.
found
I
value.
was listening. I was not watching.
That sounds insane, dude. You got to see the charts.
Again, I'm not saying I recommend doing it. I'm just saying it was a different experience.
I don't like
and
it.
I feel like I retained more of JC's words because I was not looking. I had nothing else to distract my attention. So that's all I wanted to say.
And interesting all at the same time because I actually do the opposite because I don't want to hear his words. I put him on mute and I just look at the charts.
Thanks.
Hey, to each their own, right?
Well, he knows what I'm going to say anyway. Can we please hit that? Let's
go.
All
right.
I don't actually.
All right, ladies and gentlemen, we've got the Dow futures up about 1/3%. It's 120 points for the Dow. S&P futures up 11 handles, pushing 5,700. NASDAQ 100 futures up 1/4%, 20,630. Bond futures up a little bit, 119.17, up about 1/3%. Crude oil down almost 2%, 80.5 for crude oil futures. Copper down 1.5%, 446 for copper. Gold, new all-time highs. 24.40 for gold, up another 0.5% this morning. Silver flat, just under 31 And then over in the funny money, Bitcoin 64,000, down a little over 1%. Ethereum down 2%, 3420 on rumors of the Ethereum ETF coming out very soon. Solana down 1.5%, 157. Binance 572, down 2.25%. Total crypto market cap, Spencer Israel, 2.3 trillion, with the Bitcoin dominance still above 55%, which is interesting. What stands out there, Strazza?
I mean, what a day Bitcoin had yesterday. The market closed. It kept going. Gave a little bit back overnight, but really held on to the vast majority of the gains from the prior 48 hours. You continue to see the same tape, right? So if I look at something, just 5-day rate of change, it's the interest rate trade. This is all about the bond market. It's all about the Powell since last week. Real estate, utilities, materials are up. Oops, sorry. Real estate, utilities leading. Financials are second, actually, with almost 5% over the trailing 5 days. Industrials are up there. And then when you go down to the laggards, staples up 0.5% in the trailing 5 days, right? So you're not getting that defensive bid at all. And then technology, right? That's that rotation out. So it's just more of the same from last week. And just throw this up because, small caps are talking to us and you got to be listening right now. So this is a 4-day rate of change. And it doesn't look like any sort of crazy reading yet. Small caps are up, what, 1.5% pre-market?
It's less than that now. It's less than 1%. But yes, up.
So the 5-day rate of change is going to look even better. I wouldn't be surprised. And so this red line on the 4-day rate of change in the top pane goes all the way back to a very, very thrusty time. The thrustiest time, maybe, in market history.
Thrustiest in market history.
May and June of 2020, we had thrusts that eclipsed anything that we'd seen with all the data that we have going back to 1990.
That's right.
Indicators. So whenever I say, oh, the biggest since May or June 2020, whether it's a momentum thrust or a breadth thrust, it's an undeniably bullish thing if we're comparing to the period coming off of the pandemic lows. I think this run in small caps keeps going. We start to get short-term rates of change that look more like that time in Q2 of 2020. Am I crazy? What do you think?
No, you're not. I don't think you're crazy. I don't think you're crazy at all. The way I learned it was that the bigger the base, the higher in space. And these things haven't done anything in quite some time. I know we showed it yesterday. Why don't we just show it one more time here? Throw up slide 3 there, Spencer, just to give people some perspective that these things have done nothing for quite some time. A lot of regional banks in here, a lot of biotechnology stocks in here that represents 1/4 of the index for the Russell 2000. You want to talk about big bases. This thing hasn't done anything for years, and now we're making new 30-month highs and finally getting going. So, it's a factor rotation. Like we've been talking about. That's what this is, right? And when you go back and you study bull markets, and I've studied all of them, one thing you're going to find is exactly this. You're going to get new leadership. You're going to get new areas in the market kind of coming about and sort of taking over the headlines, right? And the former leaders kind of get forgotten about. They think it's over. Then the former leaders come back again, start taking over the leadership, right? And that's what we call sector rotation. Why don't you throw up slide 5 here? Because I think this is a really important index, Freudian slip there, but we treat it like an index. And this is Berkshire Hathaway breaking out to new all-time highs. People forget about this one. This is, people are like, well, what's the next $1 trillion company? I think you're looking at it. It's not that far away. And I did a little back of the napkin math. This was about a week ago, so it's a little outdated, but really representing what Berkshire Hathaway owns in terms of Apple. It's not an all Apple thing. It's got 790 million shares of Apple, with Apple around 228. That puts it at about $180 billion worth of Apple. So that's Berkshire's market cap at this point was $885 billion. So it's about 20% Berkshire.
Yeah, but
it's probably less now because Berkshire's been absolutely ripping.
Also,
so Apple probably represents a smaller portion. I could do the math if you really want.
No. Next time, just back out the cash. They have a ton of cash, right?
Back out the cash. Why?
From market value.
Why?
Because the stock is going to move based on the total amount that Berkshire makes up of their investment assets. Right?
If Berkshire Hathaway owns $10 worth of Apple and Berkshire Hathaway is worth $100, then 10% of the company is an Apple.
Okay, fine. You're trying to do it as a percentage of market cap, right? I'm trying to do it as
I'm talking about I'm talking about the
the
weighting that Apple has in Berkshire Hathaway.
I'm talking about how much Apple's performance should drive their performance.
Yeah, I don't know about any of these like hypothetical situations that you're trying to come up in your head. I'm talking about the percentage of Berkshire Hathaway that is Apple. It might be and another thing that I wanted to
Percentage of
mention,
their
people are
market
like,
cap. To be clear, you're calculating as a percentage of their market cap.
right, so the value.
Yeah, not their total investment dollars, right? Not the market value.
I don't know
of
what
their
that is. I don't know what investment dollars is. I'm talking about the value of the company, and then what percentage of that company is Apple.
That's fine. This works.
Right.
This is fine. It's fine with me.
I have one more point I wanted to make. People are like, oh my God, Warren Buffett has more cash than ever. That means he thinks that the market is going to crash.
No, he's had more cash than ever my whole life.
Hold on. Right, exactly. Let me tell you something for you people who didn't take third grade mathematics and just kind of just like dropped out of school and go straight into trading after elementary school. You see, the cash levels might be the highest ever, but so is the value of the portfolio, you see. So the percentage of the portfolio that is cash is nowhere near record levels. In fact, it's actually pretty normal with what it always is, like in the high teens, right? I think it's like 17% or something like that, which is what it's been for a long time, and less than half of what it was when it was the highest cash levels, which about 20 years ago. 20 years ago, you had 40% cash. Today, it's less than 20. So when people are like, oh, Warren Buffett thinks the market's going to crash, he's loading up on cash because he thinks he's going to die, and he's looking. You people, you need to see a therapist, is what you need to see, because it couldn't be further from the truth. He actually has perfectly normal cash levels. If anything, it's low.
JC, go back to the Berkshire chart, because this coil in Berkshire is just textbook. I mean, this thing ripped off of the 2022 lows in almost a straight line, had a little bit of corrective action. The summer swoon last year, ramped back up right into this sweet little triangle and blasting out of it in a very decisive way, I would say. No?
Warren Buffett is a badass.
Yeah.
Warren Buffett doesn't want to pay you dividends. You know why Warren Buffett doesn't want to pay you dividends? Because he knows for a fact that he could use that money way better than you can.
It's also an inefficient way to return capital to shareholders. He doesn't believe in not returning capitals, but he believes that the way dividends are taxed is stupid, so he just buys back stock and explains to people that he's doing them a favor.
I love the fact he doesn't pay dividends. Also, line item number 297 of why Warren Buffett is the man, files his earnings on a Saturday just to stick it to the man, just because he can. Right? That's pretty gangster. I'm going to file it on a Saturday, and there's not anything anybody can do about it.
Really interesting. Yeah, no, I know. I love that. They've always done that. See, when you're Berkshire, you can, in some ways, make your own rules.
That's right.
These guys have been doing that, and they deserve to.
First of all, there's nothing against the rules of filing on a Saturday.
No, but other companies who did it would get kind of made fun. It's a black eye for most companies. Berkshire does it. It's like, oh, that's cool. It's Berkshire.
That's Uncle Warren. He's fine.
Yeah. Well, we can trust them. Anybody else that drops a press release on a Saturday, it's like, uh-oh.
Dude, right, exactly. Oh, he's the man. And when you guys have a second, go over to the Berkshire Hathaway website and just take a look at that. If you guys want to chuckle.
The Berkshire website?
Fantastic. It looks like a GeoCities. It probably was at one point.
That's awesome. He doesn't care. Yeah.
You haven't seen it? When was the last time you saw the Berkshire Hathaway?
I'll bet they still send shareholders letters. I don't own shares, never have. But I'll bet you they send you physical mail and probably a nice annual report.
Like a printed out version?
I mean, that used to be my favorite part. When I first started buying stocks, I used to love the annual report.
You have to request through your broker, but they'll do it. Yeah.
Brokers who are shutting all this down because they don't send filings anymore. And I think that's a shame.
Yeah, the brokerages are trying to cut down on mail.
But you can elect to get them. The companies are still making them.
Yeah.
To get them.
I get random random stuff from like ETFs that I own and stuff like that. What are those things called that they send me?
Prospectus. Prospectus.
Yeah, prospectus, and I get other stuff too. What are those? What are those tax forms? The
1099.
no, the ones you hate.
Oh, K9s. Yeah.
K9s. Yeah.
So
I get
so
those in the
end
mail all
up-
the time. Hold on,
they all
one
end
more.
up-
Just throw up slide 2 quickly. I just want to show people what I'm talking about. This is what the Berkshire Hathaway website looks like.
Yeah, that's really good.
So good. This
This
is the
is
whole website, by the way. It's the whole page.
This is like the SEC filing database. So it's a little better.
Yeah, fantastic. So good.
Yeah.
All right, we're gonna hit some news here. We got a little time.
Let's get some, we can hit the news at
earnings.
some point. Why don't we bring on Kenny just real fast, and then we'll hit some news after that.
We got bank earnings.
I know.
But we bring on Kenny at 8:50. I don't know where you've been. Like, I don't know, like if you're like mentally challenged or something like that.
And then we got to get to the earnings before because people want to know what matters here today.
All right, we'll get to it. Let's go.
It's been a long time coming. They ain't cuffing my clock, they tugging. Putting up numbers, 99 pounds, and I still kept it 100. Hold up. Yeah.
Kenny Glick in the house. What do you got, baby? This is like your Hanukkah, right? This is it. Well, you're on mute, so maybe.
This is Kenny's Hanukkah. Yeah.
We're talking bank earnings, actually, like we did yesterday with Goldman Sachs. I don't know if they call it a bank anymore, but yeah, I talk about what's important.
Didn't they convert to a bank during the Great Financial Crisis? Wasn't that like a thing?
Maybe. I don't know. I don't know.
I think they converted to a bank to get access to cash or something like that. That was like a thing.
Oh, okay. Okay, cool. But yeah, today, what do you want to talk about? You want to talk about EBITDA?
I want you to tell me what's on the move this morning, so that I can I can YOLO along with.
First, give Kenny props for yesterday. That DJT fade, spot on, man.
Goldman Sachs as well. You got your 10 points, but what was amazing about the Goldman Sachs, and again, you don't need charts right now. I'll just tell you with my eyes. Goldman Sachs was, again, you want to talk about Hanukkah and Christmas. That trading action yesterday was everything rolled into one because you got the fade. Then the fade was bought, and you actually had a nice VWAP break to the upside. So Goldman Sachs went from a beautiful short to a nice long, like we're short Bank of America right now. Hang on. Got to put a bid in. Hold on. We're short in Bank of America. If you see what's going on in Bank of America right now, you'll understand why we're short already. I just trade VWAP breaks on earnings reports, and it works. So I sit here, and again, if you want to analyze what the numbers were, that's old news already. Now it's all about what the stock is doing in price action. So if you're gapped up at above the VWAP and they start to sell that, the fade usually gets more intense like Goldman Sachs. But then you look for that fade to be bought because we're in a bull market that doesn't go away and you get a chance to buy the stock on the way back up. So again, right now, you're a shorter of Bank of America from the break of 42.75. But if it breaks back above, let's say that 42.70 later, chances are we're going to be buying the stock. So I'm just going where the action is, and usually it's earnings.
Give me something. Is there something on the move that's not related to earnings, or is this all earnings-based action?
The swings are still working. Hang on, let me just get out of some of this Bank of America short. Done. 21.20. That's me on the bid. If you want to hit my bid. Generally, like I said,
See what you did there.
You wanted me to stay away a little bit from the small caps, but those are the ones that are generally moving at the beginning of the day. But let me show you. Strazza was talking about Sophie, I think. I picked up on that yesterday. Beautiful chart. An old Strazza chart was the S that woke up. The path didn't work out for us, but that S chart, the Sentinel, same kind of thing. And I've been trading this company. I don't know much about it. Hut. All over the place, phenomenal trading action. I'm looking for it as a short because generally when they pop that much, they give back something. And that's my list for today. So again, I'm watching the Trump stock, Bank of America, Morgan Stanley, Jumama's still on the swing.
Yep.
EOSE, again, same list. And if you guys want the list updated, again, just sign up for the email list.
Did you just call it a Jumama?
Jumama, that's our code name for GMA.
You call it Jumama. All right.
Yeah.
Jumama for the African Amazon. Jumama.
Yes.
All right.
Yes, I think they sell rugs in Africa or something like that. They're owned by a German conglomerate, which I think
they're German. I have noticed that.
Yeah.
I have noticed that the Amazon of Africa is owned by the Germans.
Yeah, I thought that was a joke, but apparently it's real. But the stock,
I didn't see that coming.
you had a nice power gap, and it got bought into the power gap. So that's something really, really bullish. And it got upgraded. That's what caused the power gap, which is very odd. Usually the upgrades get faded. This one got bought, and then they tacked on even more. So Love and J MIA, still looking for it to go to 18. But yeah, I'm sticking with the Bank of America. I just covered some of the short just now, and just waiting to see if it gives back the rest. And then we'll see if we get a Goldman Sachs move out of it.
A Goldman Sachs move.
Yeah. Dip and rip.
I like the Jumama. I like the Kazakhstan one. You look at the Kazakhstan one, KSPI.
No. Oh no.
So this is the Amazon of Kazakhstan.
Oh really?
Yeah, Kaspi.
All right.
Yeah.
I'm on it now.
ASPI. Yeah, keep that one. I mean, if you're going to be looking at Jumaya C Limited SE, that's the Amazon of Singapore, right?
That side actually had a really awesome move already. SC
Yep.
35.
You got Mercado Libre. You got Coupang.
Yes.
We got all the Amazons. All the Amazons from all over the world. We got them here.
Right. Well, the best thing, like I said, it's hard to stay focused. There's a lot going on. Yesterday was a bonanza. I mean, it was a pretty damn good trading day, especially with the Goldman Sachs and the Trump to get us started. But like I said, I try to stay focused. It's hard to stay focused when there's lots going on. So earnings, a couple of small caps, and a couple of swings, and that keeps me focused.
All right, Kenny, you're the man.
All right. I'll see you guys in the room.
Why don't you give everybody a little link as to where they can follow Kenny throughout the day?
Yeah, I'll drop in the chat right now, and hitthebid.com. That's where his room is. Hitthebid.com, right there. If you're in,
Right on, boys. All right, be careful out there.
Adios. YOLO responsibly.
All right, let's drop a QR code real fast. That'll get you Kenny's daily watch list, and then I'll drop the link again. Hitthebid.com in the chat. All right, 8:59. We kind of mentioned the banks a little bit. I mean, mixed this morning, right? Morgan is down, Bank of America's up. The numbers are, they always beat. Although I will add that Morgan Stanley is following suit. Was it Goldman Sachs yesterday that was raising their dividend? Morgan Stanley is doing the same thing. So they're raising their divvy from 85 cents a share to 92.5 cents per share.
Because Morgan Stanley came from the Young Aristocrats. That's a Young Aristocrats name.
Okay.
These are companies that have raised their dividends every year for between 5 and 9 consecutive years. I'll need Strazza to confirm, but Morgan Stanley may have graduated from the Young Aristocrats list and now might be double-digit years. It's getting a little older in the. It's a less young aristocrat. Right?
Sure, an older
aristocrat.
Sure.
A maturing aristocrat.
Mature.
What else? Any other news?
There is, but I'd like to save it for a hot corner because it's hot corner related.
Ooh, so I see what you did. A little foreshadowing.
I want to save it for that. I mean, today's Amazon Prime Day. Today and tomorrow, if you care. Basically.
What should I get? I like years ago I bought the Echo. The Alexa thing. I used it a little bit and then kind of got. Then we haven't used it in forever. I don't even know.
Yeah, you and everyone else.
Yeah. I mean, it was like $10 or $20. Like I remember it was like almost nothing. They get you on the subscription fees, I think.
I don't know. Why don't we ask our guest? Yeah,
my nanny told me this morning that her husband got a TV.
TVs are dirt cheap. Why don't we ask our guest here, Douglas Boneparth?
Oh yeah.
We ask him what to buy.
Insights.
He might have some ideas for you.
Yeah. All right.
Yo,
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Dougie Fresh in the house.
JC, what's up, man? Good morning.
Dude, best hair in finance.
Happy Prime Day.
Listen, don't listen to what they say about you. That hair, that is really something.
Yeah, I woke up like this. Can you believe it?
What are we buying on Amazon Prime Day? What's the move?
My wife woke me up. She goes, "Oh, Prime Day," and starts reading me off things on there. Dude, it was a bunch of nonsense. I think there was like a blue light face mask.
What is that?
Mentioned, I don't know, some like UV ray lights that make your face all nice. You put on this mask and it just shines. It looked like a giant gimmick to me.
Yeah, it's a scam.
Yeah, scam.
It's a good scam though. It's a good scam.
I didn't see anything we really needed.
Well, do you really need any? I mean, you don't need a lot of things you buy.
No.
So there's nothing that like stood out like, oh shit, I'm gonna pick one of those up. Nothing.
No, I mean, listen, I ordered some like men's vitamins yesterday. I wonder if they were on sale today. I'll feel bad if they were. Those vitamins aren't cheap.
So you
I
got
wonder if
so
they're a
you
scam.
I was gonna say you got past the face mask scam, but they got you with the vitamin scam.
100%.
Yeah, yeah,
100%.
got it. Why don't you tell the folks, Doug, new guest on the show, old pals. Why don't you tell the folks a little bit about your day job and through
Sure.
what lens you view the world?
Yeah, yeah. So I'm a financial advisor. I run a wealth management company called Bonafide Wealth. We primarily cater to now your geriatric millennials like you and I here. But we focus on a younger demographic, kind of getting your life started into those higher earning years. I've been doing this for 20 years now. Grew up the son of a certified financial planner to become one myself. So the lens that I typically view all things financially related is a very personal one. We're out here leading with drafting financial plans and creating financial plans for clients, and then pairing that with asset management and helping people be very, very disciplined when it comes to how they manage their money. Probably very boring stuff to those who like trading and being more active, but both have a place in this world of investing. So those are the two things we do: the financial planning piece, very disciplined long-term asset management.
Are you just like a glorified babysitter, kind of?
I think it goes beyond that. I mean, it's very easy to say, hey, let's just do low cost passive indexing and, hang tight. I mean, I think at the core of it, that's what you got to do. I believe a consistent and disciplined investor. And you could say that about active traders too. You got to be disciplined and consistent. You apply that to, either side of the equation here. And that's the bulk of the work. But there's a lot that goes into just maintaining and managing that, right? It's a question of
What about like therapy sessions? Do you get like the phone call like, oh my God, the market's gonna crash, the president, the Fed, do you get like outlandish random like paranoia, or is it
significantly less out of the younger demographic, because we got
wow?
little kids running around, our lives are busy, we're trying to 60-80 hour work weeks. In my experience, I noticed more of that out of the older demographic, the boomers, who have more time on their hands.
Well,
right?
they have more time on their hands to consume all the bullshit news, and they
More
have more
assets.
to lose.
More on the line. So they're, with more time and more in their brokerage account, they can call you up on a Thursday or Friday afternoon and be like, why'd the market sell off today? I also think maybe the era that they've come with, like, this is purebred financial planning here. Our clients don't know any other way to operate that, taking a look at these plans, executing on them, and investing accordingly. 30 years ago, it's brokerage era. It's someone calling you on the phone and saying, hey, I got a great stock tip for you. I think we should, go execute on this position here. And then you're following that one. Less so today.
How do you think about I know it's on a case-by-case basis because every investor is different. They have different money, different objectives, different ages, all these things. So I get it. Can you just talk generally about alternatives to equities, right? Like
Yeah.
you've got bonds and you've got gold and you've got Bitcoin and you've got, the shit coins and the NFTs and right? I don't know how far down you get, but my point is, like, how do you think about alternates? And has that changed over the last several years as some of these relationships have shifted? How do you think about that?
Yeah, so you're seeing more people come to the table having messed with things like digital assets. I mean, if you look at, let's talk about digital assets for a second. 5-6 years ago, very, very small minority of clients would be asking questions or have exposure or want to know more about that. And then you get over the last, 3 years or so, and it's much more common. You have prospects coming in the door with pretty significant exposure if they did really well. That's been very interesting. I also think technology and access to the alternative space has really unlocked demand. You can do fractional investing in almost, any all class you want, from art to collectibles, real estate. So, that's been somewhat of a key for giving younger investors the opportunity with lower amounts to purchase with to go into the alt space. So it's been a very compelling argument. Also, just like distrust or skepticism over your more traditional financial systems from a younger demographic is there. So you see that kind of gravitation to alternative asset class. Maybe the future is on a digital space. Maybe it's getting your hands on collectibles and things that really strike at the nostalgia factor. I love 90s nostalgia. There's a lot of stuff out there that I remember from childhood that how many NES cartridges unboxed are fetching premiums now? I'm not saying like a flood of money is going there,
Do
but
you have any?
do I
Do
have
you
it?
have any?
I just want to play that. I just want to find the time to play Zelda.
Yeah.
It is a whole other thing. I'd rather build some Legos and just have some fun. But yeah, that ability to get exposure to these things has never been greater. So you're of course going to see a larger demand there. Having said that, the vast majority of portfolios are still going towards your stocks and bonds in, whether you're starting out with a risk adjusted profile or you're adding opportunity portfolios to that to take various picks of, high conviction stock issues or anything that really is catching the eyes and minds of a younger investor.
Has your thoughts about bonds? I'm mostly interested in the bonds situation.
Too.
How you were thinking about bonds with clients maybe 5 years ago, 10 years ago, and how you're thinking about it now. Has that changed at all or no? Like, do you change durations?
Yeah. Specifically in the last 2 years, it has, and for a number of reasons. So before we've gotten to the current fixed income landscape that we're in, for if you're talking younger clients, you don't have that much exposure to it. So you're talking like maybe an 80-20 portfolio, where 20% bonds are there and being used as a volatility dampener, right? And you want to be mindful of, if you got a high earning client, you're not generating a tax bill just to dampen volatility. So really just to have that exposure to control volatility, get a little non-correlation between your stocks. But then you get to 2022, where you get the worst bond market in 100 years, right? Like that's a real stat. And you kind of have to take a look, number one, when the Fed was, saying we're going to raise rates, like, you're going to fight that. So I think if you bit down on that, and we did, you went short duration, you went inflation protected, you realize that like, hey, bonds are going to get crushed. And we don't make a lot of calls here, a lot of active calls, but that was one that we did. That was very good for our older clients who have obviously 40, 50, maybe more % exposure. You just save them, a drawdown, an epic drawdown on their fixed income portion. Good for us, but you got to get it right twice, right? You got to know how to, go short and then go back long. So I'd rather be early than late on that. So, going back 6-7 months through to today, we make the assumption like rates probably are not pushing too much higher here. And we watched that 10-year throttle, in the upper fours, kissing 5%. And you're like, all right, this is really where maybe we get ahead of the Fed here. They're going to cut rates. I can't see them getting higher. You go back, to the longer duration side and you make that call. Early's fine. You don't want to be late on that. Either way, you've created a massive spread from 2022 into 2024. So I think fixed income is quite the story. And it's a rare environment where you can, hey, I can buy bonds now and clip a nice coupon, relative to the last time we saw rates where they are. You got to go back to 2006. A lot of my clients don't even remember when money markets were getting you 5-6%. Some vaguely do. We were starting our careers at that point. And, you're saying, hey, if I could, buy some bonds, what we get about 5% on, good grade, corporate debt, you're going to get paid to hold it. And now what? The Fed's going to lower rates. So you have that opportunity for appreciation there as well. So in the short to intermediate term here, somewhere in there, like bonds look pretty attractive. There's a play to be made there. So, look, if you're buy and hold and, you just got a portion of your portfolio, on in fixed income and you're not thinking about going longer duration, now's the time to start like thinking about that. If you have too much cash, and I see this too, where, clients getting high on the 5% risk-free yield, thinking they're not timing the market, but that's exactly what they're doing. So they're holding too much cash, feeling safe and warm and loving these rates that they haven't seen in a long time yet. Go look at the S&P halfway through the year. So congrats on clipping 2.5% risk-free at the halfway point. Meanwhile, as far as just the market goes, you missed 14-15%. So that's a good lesson for folks who've like really have their first foray into like higher rates or non-zero interest rate environment rates. And again, just a play for bonds here. I'd love your opinion on that, whether you think, they're attractive in this environment, given where rates are and that rates are going to go up. Down.
Yeah, I'm from my perspective, from my lens, I don't deal with customers as a financial advisor, so I think of it more selfishly, and I see the bond market as a mess. I see interest rates as a mess. I see the dollar as a mess, and that's good for stocks, right? The stock market doesn't necessarily dislike higher rates or lower rates. It's more about the rate of change.
Yeah.
And the fact that they're just in a range bound market. The market loves that, and we're seeing it, right? Like, I'm not just making it up. Like, it's been like that for a long time, and the market's just reiterating that is the case. So that's how I see it. And just as a reminder, the folks are like, why is JC asking Doug all these financial advisor questions? Because he's a financial advisor, you see. So I like, see, a genius move there. So I'm very curious because, we have some people that might be active portfolio managers coming in here. Some people are day traders. Some people are swing traders. Some are more bond guys, right? So everybody's looking at the market from a different lens. And I think that unique perspective adds value to the conversation, right? Which is why we're trying to do here. And Doug, I didn't just invite you because we're pals. Like, I want you to come in here to share your views. And I'm fascinated by all of this stuff, particularly the alternative stuff. And I want to turn our attention to international markets, right?
Yeah.
So here in the United States, if you've had that home country bias, you've been rewarded for that, because we got a shit ton of technology in an environment where technology is outperforming and other countries just don't have it, right?
Yeah.
You're not going to get any technology stocks in Peru, right? You're not going to get any technology stocks in, in South Africa or whatever. Like, you got some tech in Israel, you got a bunch of tech in Taiwan, you got some other countries here and there, but it's a U.S. thing.
Yeah.
Right? It's a U.S. thing. How do you think, and any time that you've tried, particularly you as a financial advisor and others out there, to diversify away from the United States and get more international exposure, you've been penalized for doing that.
Yeah.
Right?
Yeah.
So at what point do investors stop being penalized for expanding globally and start to be rewarded for that?
Yeah, that's a really great question. And, you look at, like, take that Ibbotson
I
chart.
thought so too.
Yeah, you take that beautiful, colorful Ibbotson chart with all those squares, and you go back far enough in time, and you'll see, like, emerging markets be at the top of the stack for many years. Like, if you're gonna go out there and take the risk, you got to get the premium. So you go back in time, you're like, that can reward me. Even developed international has popped up there, and then you get over the last, like, 8 years, and it's just nowhere to be found. Like, large growth, just absolutely obliterating anything else. If you think long-term enough and in cycles, you have to have this belief that we're going to live, over the next 20, 30 years at a time where we see international piece climb back up. It's hard for me to think that we'll exist in a world where it's U.S. large cap all the way. Having said that, you look at risk. I keep coming back to this 80-20 portfolio as just our example of a risk of risk adjusted. What do you got? You got 20 to 25% in developed. And then you got maybe 7 to 9% in emerging markets, and you go up to the large cap growth area, or just large cap in general, and you're 35 to 40% there. So look, it's weighted appropriately. It's not like you're really shitting the bed for having exposure to international. There's also flavors of international that you could take. Shout out to my friend Perth, who runs.
Oh, you nailed it! I literally just pulled up the chart. Throw up slide 2 there, Spencer.
There you go.
Oh my God! About to ask you. It's a mutual friend of ours.
There's Perth. She's awesome, and she created the Freedom Fund. We use this in, this is our EM fund, and you've been rewarded for taking a story that is, I am going to focus on emerging market countries that treats their citizens with a degree of freedom. You look at how they're treating people. I mean, there's no China in here. There's no Russia in here. You look at an emerging market, index, a standard emerging market index. I think you got like 30% exposure to China. And here's a story that's playing out well. No one's going to be disappointed with that breakout right there on the EM space. And you compare that, it's getting points ahead of just your regular core emerging market indices.
And
so,
no India here.
No India.
Do they treat their citizens poorly?
No, it's interesting. It's not binary, right? You can go to her research to see how they filter these things. Like, you go to countries where clearly they treat people wrong and you're not going to find them in the index. Like, how do you adjust for a Singapore where, like, they will take care of you cradle to grave, but, don't spit in the streets. You're going to get, whipped or caned for that,
I'm just surprised. First of all, I'm surprised that there's. I'm looking at the top 10 holdings in FRDM.
Yeah.
As of the close of Q2, no India.
Yeah.
And the ETF, no China either. But India in particular stands out because India has been so dominant in terms of its performance that this index is making new all-time highs coming out of a multi-year base, despite not having any Indian exposure.
Wild.
I think that's very impressive.
It's super impressive. And again, she a good friend, and hats off to Perth because she's absolutely. I was there when she launched the ETF downtown. It was really cool to see that. I wish her all the success in the world. But here's an amazing story that's playing out well in client portfolios because listen, you say, are we just babysitting? I could have picked any emerging market core index, and just said, cool, we have exposure to emerging markets, or we can do some research and find out what maybe the best story around for clients. So is that considered active management? I mean, to some degree, yeah, we're actively selecting, which fund should be in a client's risk-adjusted portfolio. There's always
hold
this
on,
joke,
Doug. Doug, this is your EM fund?
This is our EM play for the last maybe couple years.
Wow. Well, that's good.
I grew personally, and this is where our view as advisors can come through in terms of how we allocate money. I was tired of seeing that 30%, primarily that 30% exposure to China, whipsawing EM portfolios back and forth.
Yeah, but Doug, you wouldn't be complaining about that if China was ripping.
No, but I'd have to make the choice. Do I want this long term? It's ripping over a year or 2 years until another ghost city implodes. You have to have some say and some view of how the world works here. And I said I'm kind of tired of that. I would prefer that not to be here. And look, there's even a trade-off. I don't get India exposure, right? That's something. But you can add an India fund to your.
You can add an India fund, right? Because it's a bummer
India
not having India.
I really want that exposure. You can throw it in there.
Yeah, no, I get that. Love that. Absolutely love that. We got to get Perth back on the show.
Yeah.
Maybe we'll get Perth and Doug together. That would be fun.
That'd be cool.
That'd be cool. All right. Why don't we talk about commodities, please? Commodities, I'm old enough, and you also, as your gray hairs can prove, that you were around also during the last commodity super cycle, during the last bull market. So you've witnessed this. The kids these days, they don't remember when gold used to be cool. They think gold is just boring for old angry people. Being a gold bug was cool, 15, 20 years ago, right? Not so much 15, more like 20, 25 years ago. Damn, getting old. How do you think about it? Gold making new all-time highs literally as we speak. What about things like copper, crude oil? How do you, are there ETFs are tough for commodities, right?
Very.
Unless you're commodity specific, and even then it's not great. How do you think about a commodities natural resources sleeve?
Yeah, look, you're looking at the hard. I think you're right. I think it's a very difficult place to be, especially as a passive investor. You also think about,
which, by the way, makes me more bullish because of how hard it is to get involved. Keep that in mind. When there's 1,000 ETFs and there's a new commodities ETF coming out every day, and the leverage ones are dropping, we're probably a little later in the cycle. The fact that you can't even find a goddamn ETF to invest in commodities.
Yeah. I mean, it's just like how they function. I mean, it's a hands-on play. Like if you're really going to dive into that world, people usually, from my perspective, want commodities exposure as an inflation hedge, or they want hard assets, or they want non-correlated returns, and they want that as like a sleeve in their portfolio. It's just hard to be like, hey, let's allocate 5% of, $1 million portfolio to, commodities and be like, all right, this is really doing something for us here, as opposed to the folks you're probably more familiar with who know how to play this area. It's not a huge part of how we allocate because I believe, getting the exposure that you want takes more effort. And it's not that we don't have the ability to do it. So we got to scale that ability across, a financial planning practice. So it's not really something that's been in like our target for the most part. And when you look at the demographic that we serve, I'm getting more, requests around Bitcoin and Ethereum and digital assets than to your point, like the young kids don't remember a day it was cool to hold on to gold and precious metals. And that's like what you were allocating to when you're like, I want my commodities fund and exposure in my portfolio. Today, people are like, and speaking of like ETFs and commodities, like now you have Bitcoin ETFs. So even
and
the boomers
Ethereum
can get
coming
in.
around, and Solana around the corner too, probably.
Yeah, they're coming right up. There's no reason you're not going to see that in short order.
Do you think about them as commodities, or you think about it as more tech?
I think you split the ticket here. Probably less commodities, more tech, but also like I view Bitcoin as digital gold. I know it's cliche almost to say.
What
that
about Ethereum then?
Yeah. Say again.
What about Ethereum?
Yeah, that's more the technology play to me. Like,
so if Bitcoin is digital gold, Ethereum's not digital silver.
No, it's not. And that's why when you get that like technology thread running to it, it could permutate in a different direction. You know, not to offend the silver and gold bugs out there, but rocks are rocks. You know, I know they're more than rocks, but you know, it's a thing. You know, you can touch it. You can't touch the blockchain.
Dude, gold bugs hate it when you call them rocks. They
I
are.
know
It's a mineral. It's
I
a
know.
mineral,
I
JT.
apologize, guys. I have no hate for any asset class here. I want you all to make money.
Why don't we talk about psychology a little bit before we let you run? You are quite the observer of human behavior, right? You have to be. You talk to investors a lot. My suspicion is you've walked a couple of people off the ledge at times throughout your career. What role do you think human psychology plays in the market? And then just from a personal finance standpoint, being able to recognize your own flaws and, your own biases and trying to overcome that to accomplish your ultimate goals. Like, how do you think about all that stuff?
Yeah, you have to learn from events as you go. I think what's hard for young financial advisors is they don't have the experience of living through cycles and they don't know necessarily how to approach. But then you're also met with it's psychology to the tune of every individual client. So I'll give you a good example here. I cut my teeth and moved to New York City a few years in as a financial advisor in October 2008. So literally the first year and a half of my career in New York City as an advisor is working for a practice that's primarily pre and post retirees. You can only imagine how the phone is ringing off the hook from October 08 into, mid of 2009. And I take this as probably the best learning lesson of my career. We were very successful. At least I was very successful in talking those clients off a cliff. Humor is part of what I do. Like, dear, Mr. and Miss Smith, if you really think the wheels are falling off here and this is the end of times, are you going to be calling me next week wondering, how we get money? We're all on the roof protecting, our things with guns and Neosporin. And you take this environment as one of the biggest learning lessons. And then, you're like, all right, as an advisor, I can look back at this and realize that there were opportunities there. Like, how would we have successfully navigated a client in the depths of March 09 to actually take cash if they had it? Now, what was interesting about 08, 09 is financial crisis, unemployment, is what's really preventing people from tapping cash or rotating assets, into more risk on assets out of their bonds and stuff like that. But then you're like, there will be a moment again where, this happens. And the whole time I'm thinking it will be another financial related one. And sure enough, it's not. So now we're in 2020 and it's a health related crisis, right? It's COVID, but yet you're still got your wits about you. Like, hey, I got that learning from 08. Here we are in 2020. How do we get clients' head around the fact that we are on a 33.5% drawdown on the S&P 500? We should probably bite down on this. And you lay out the roadmap, you best intended plan. You say, let's take these lessons and make this happen. And you're still met with, I don't know if daycare is opening tomorrow. I don't know if my job's going to be there tomorrow. I don't know if we're all going to be around tomorrow. Worst case scenario. Doug, I love you. I'm not going to sell. That's the main goal. Like, don't sell at the bottom, right? If you're a financial advisor advising clients and there's an epic drawdown like that, your number one goal is do not sell this bottom. You will never recover from that. And at the very, very least, just rebalance your portfolio here. Go scoop some stuff up here. But how do you go out to home plate, third base here, which is, do we take 3 months of our cash reserve at a precarious time, or do we rotate out of any fixed income into those cheap equities? And that's so hard to do. I was expecting a double the amount of clients that actually did it. I was glad a lot followed that. They're not regretting the decision to do that, but it's extremely hard. So yes, a lot of this is about psychology. I think that's where financial planning comes in. When you give people a basis and a roadmap to follow and stick to, they're going to do a much better job at sticking to their plan than shooting from the hip or panicking or getting their emotions, all involved into their investment strategy. That's the number one killer. Full circle moment. Discipline, right? And consistency is what separates okay and good investors to the great investors. And if you have that and you enter environments where things are wild and things get scary, you can find someone who's going to execute and take advantage of the situation in the context or in the confines of their own financial plan. Like even 10K in cash, 25K in cash at that moment is going to add points, to your overall annual rate of return, which when you're doing planning, you know what annual rate of return you're trying to achieve over a long period of time. And it ain't a double-digit number.
And a couple of points here and there really compound big time. And if you've done the math, you know that.
Yeah, like you get that percent. You create that. Same with the fixed income thing we were talking about. You save an older client on 40% of their portfolio, classic 60-40. You see a 14% drawdown in fixed income and you gave them a 4% drawdown. You gave them a 4%. That's a 10% spread. Holy crap, man. Your plan's going to, when you revise that financial plan, it's going to look fantastic.
Yeah. Are you eating a lot of your own home cooking, or are you veering off and doing a little bit of your own thing? Like, how do you think about what you do for clients versus what you do for yourself and your family?
Absolutely. Let's go 80-90% of what I invest in is my own cooking, just dollar cost averaging into the main indices. But in the retirement account, I'm always a fan of there being an opportunity portfolio. I have zero qualms with someone saying, let me take 10-20% of my investable net worth. I believe in X, Y, and Z. I was lucky on the NVIDIA trade. I'm like chips. I grew up with computers. That seemed like something to do. And there's losers in there too. Like, my wife and I are like, lockdown, Peloton's going to take over the world. Got a 3-bagger, full circle back to, 90% drawdown. So a little bit of picks here and there. We were early adopters of Bitcoin. We mined Bitcoin back in 2010 from a friend who wanted to just mess around with it. We learned a ton, made out pretty well on that. Not enough to retire, but big believer in blockchain. And, I think Bitcoin, love to see it kind of going mainstream here. That's been a highlight. But when it comes to just fresh money going,
you think?
I got it. When you got Larry Fink out there, spitting out high conviction around Bitcoin.
I was surprised nobody mentioned it in the debate.
Yeah, not only in the debate. Well, I think you're going to hear a lot more of it after yesterday's VP pick and kind of this pro.
Yeah, because he's long. He's got like a $250,000 in Bitcoin, right?
Say again.
He's got like a $250,000 in Bitcoin.
Yeah, he's got a $250,000. He's ingrained in the like, hard to talk about the VC world without getting some conversation around digital assets and building in that space. So we're definitely going to hear more of it. And yes, I do think we took a big step towards mainstream, but hard to say something's mainstream. It's only been around 15 years in the world of finance. We got asset classes that have been around 100 years. So perspective really comes into play here.
If you are a 42-year-old male with real estate and equities portfolios and a family of 5 with 3 children, a 3-year-old and twin 1-year-olds, what percentage of your portfolio in this hypothetical situation should one have in Bitcoin?
How much you have in Bitcoin? I mean, as the advisor in me is no issues taking 5-10% of your investable portfolio and pursuing
10% of the portfolio in Bitcoin?
10% up to, I wouldn't go there, but that 5% sleeve sounds good. You love these charts that are like, here's what your portfolio would look like 1, 2, 3, 4, up to 5%, over the last 10 years. That chart always shows a very compelling story for having some exposure to it. But I think, when I say 10%, when I talk about, we're talking about concentration risk. So clients all the time come in with concentration risk from their RSUs and exposure from their company. And, if they hit a home run at their startup, or they're just at a mega cap that pays a good portion of their compensation and they're doing great within 3 to 5 years, they have concentration risk, right? We're seeing 20 to 40% of their portfolio in their company stock, and they need to have a plan for that. For the ones that like, hey, I don't want to sell all of this because I think we could double or triple, you got to figure out what that sweet spot is. So concentration, I never want to see more than 20% of anyone's portfolio X their personal residence, X, S&P 500 and the index. I really don't want to see any more than 20% in one singular position before you start seeing, returns and your portfolio value get dictated by that one stock. And that's very relevant for people who struggled with NVIDIA or any Mag 7 stock where they're like, shit, 50% of my portfolio is in 2 positions or 1 position. How do I deal with that so I don't, lick my wounds when that next 60% drawdown comes?
I got one more question. How do you think about like vacation homes? You got your primary resident, you got your liquid portfolio, you got your retirement stuff. Like,
Yeah.
where does like a second home fit into that situation? How do you think
Yeah.
about that?
I think about the objective of that home, right? So let's break it out into people who just want that in their family. Doing this right now with a really good friend and client, they're looking upstate for that, that upstate cabin, if you will. And I asked, is there ever a moment where this is going to be generating income for you? How are you going to be treating it? He's like, no, generations to come. I want the kids and the grandkids and all of
Yeah,
that.
right.
So
Me
I treat
too.
that like an asset, right? Now you have exposure to, real estate here. We're going
So
to
just
think of it
add
like,
that to the value of your home, I guess.
well, it's funny because I view
Like, is
your
it part
personal,
of that, or is it part of the like alternative investments?
the
Like, how does
alt,
it
yeah,
work?
I'm gonna push it more to the alt space. If you're saying
Yeah,
like, hey, I got $1 million cabin, upstate in the mountains there, that's now a real estate asset. It then morphs again if you're like, hey, I'm gonna put a renter in that 6-7 months a year and enjoy it. Now you got an income producing real estate
sure.
asset, and you can think of it a little differently. And both of those are very different from how I think about your personal residence. Like, that's on the balance sheet, but I don't even view that as a retirement asset.
Yeah,
That's a memory factory to me. Good luck calculating your ROI on your primary residence. You're gonna log every nail and tack you've ever bought. Dude,
right.
enjoy it, beat it to death. Keep it. Go create those memories. And if you walk away, if it's your forever home and you walk away 25, 30 years, like the boomers are today with, cash in their pocket, well, how much of that cash is really profit? Good for you. I hope it's enough to then, go to the place you want to retire. Or maybe you're just going to be a renter at that point and not have to deal with home ownership. The kids are grown up and you just want to go travel and stuff like that. So it's unquantifiable. That's right.
But I like how you're thinking about that on the alternate side. So you got your residential real estate, you got your liquid portfolio, then you got your Bitcoin and your beach house, right? So like
Yeah.
Avalon, beach house, and Bitcoin. I wish the houses there were only $1 million.
Yeah, it's insane down there. Yeah, we were talking about that. We'll be back there later this summer, but you
Dude, I
can't
was there
even like
for a
talk
month.
just
It's
$3
freaking
million
awesome, man.
starting point. It's insanity. I don't even know how. I
Dude,
don't
it's
even know
like
how
$3
you get
million
in
just
there.
to get on the island.
Dude,
For like the shittiest, smallest house, $3 million, dude.
easy. Yeah, Margate's the same way. Longport, South Jersey Shore, just the South Jersey Shore, blow it up real big there. But yes, and when you start to add up those things, like you got that Bitcoin exposure, you got that second property in your portfolio, you add up all the other, stuff you're messing around with in the alt space, you start seeing like 25, 30% of your investable net worth or your net worth like allocated to alt. So back to what you said earlier, like how much are you seeing that? As you mature into building wealth, you find yourself, with more in alts. And, you look at the big endowments of the world, like the Yale endowment, and you see how much they have in alts. It's like 30, last when I was in business school, they had like 33 to 40% in the alt space. So you start to model these like really institutional portfolios at the personal level. I will say though, if you go your entire investment career as a personal investor and you're like long mostly equities and you're consistent of getting money into the market, it's an amazing compounding machine. You know what your goals are, you have a plan to get there, and you just want to be a disciplined equity investor with a sprinkling of fixed income and ignore everything else. You probably are going to do just fine and crush it. That's the great, because you're disciplined and you're invested and you're doing what you got to do. That's what's so cool about investing. So many ways to get this right. Also, a ton of ways to get it horribly wrong.
Oh yeah. Yeah, we see that all the time too. I love how this turned into like a consultation for me. I really appreciate that.
Come on down, man. We got you.
I'm taking notes.
Guys, I dropped the link tree for Doug in the description. As I mentioned, tremendous follow on Twitter, but all his links are in there. So check it out if you haven't already. Doug, this has been fantastic. Thank you so much for coming on today.
Yeah, no, I love being here. I'll be honest, I was like, oh my God, I'm going to have to talk about specific issues and stocks, which is, really out of my wheelhouse other than, what we all follow online. So I really appreciate you diving into like the core of what we do and getting to pair that with, some really great commentary around how we think about investments. This was awesome. What a way to start my morning, guys.
Love it. We'll do it again, Doug. Well, you and Perth together, and we'll get down and
that would be cool. Yeah, I would love that. She's fantastic. Get her back on here.
Love it. She's in Texas, right?
I think so.
All right.
Good question. I only see her when I'm in New York.
I know. Or California.
Yeah, true.
Yeah. Cool. By the way, Thursday, Fide drinks.
Awesome. We'll try and get there.
Yeah. Stone Street. I think like 5 o'clock or something.
Let's do it.
Cool.
All right, guys.
Adios.
All right.
That was great, dude.
That was a ton of fun. I have a ton of interest in those types of conversations.
It's
I think
personal finance
selfishly,
stuff, like with like a real professional.
yeah. And like selfishly, we all want to have those conversations about our own. That's why you asked about the second house, right? so yes,
I'm
that
trying
was
to justify how expensive it is getting in this goddamn island down there.
Yeah.
Jesus Christ.
no, that was a lot of fun. So we'll try to do
And
more
I
of
like
those.
how he's thinking about that as part of the alternate space. That was interesting.
I like how he was like, what are you gonna do? Quantify your memories? Like, come on. All right. Like,
Yeah.
all right. Okay. We got to talk about some things. Let's start with Steve. What do you want to start with? Schwab? All right,
Yeah,
let's
we'll
start.
start
Do
with
we have
Schwab.
the Schwab chart? If I can talk.
It's not much to look
No,
at.
I think it's flat here. No. Whoa, very wrong, Spencer.
Selling a little bit.
Down 7% here. 7.5%. Beat by a penny on the EPS. Beat by a smidgen, like an inch on the sales. But down. I haven't looked too much deeper into this. I'm sure there are some other numbers at play here, but like
Top line missed a bit.
It's
from
what?
what I'm saying. Top line missed a bit. from
I'm
what
seeing it's more or less the same number. So anyway, down 7.5% this morning. Now 8%.
Probably some sort of brokerage metrics. Let me see if I have any color on it. Nope. EPS in line. I'm seeing top line missed by, I don't know, 600 million.
Okay. That's whatever.
60 million.
Yeah, like I
Sorry.
said, it's the same number.
Yeah, 60 million. All right, hit the banks. These guys are more interesting right now. Bank of America, nice beat.
Yes, Bank of America now up about 3% on the day. Yeah, EPS beat, sales beat. The banks. I say that, in remember what happened on Friday or Friday when Wells Fargo missed, right? But the banks you pretty much always beat both metrics, right? So it's not a total surprise there.
A lot of levers, but these were nice. These were quality beats. So, like, if you look at Bank of America, the investment banking for all the big six that have reported so far is just coming in as a really hot number. They did provide some color on their commercial real estate business, which people were looking for.
Right. So you see, and there's the thing. We talked about this yesterday. The bar was kind of set last week, right? JP Morgan, and Goldman, and I guess it was Wells. They all talked up their investment banking, that it's really coming back. And so if you're wondering, well, what's the deal with Morgan Stanley this morning? Morgan Stanley is down. They weren't nearly as enthusiastic about investment banking. The revenue in that segment did increase 50%, right? Which actually be the estimate there, but I'm seeing a lot of talk this morning.
Let me read out some of the segment revenue because you're spot on. So back to Bank of America, they beat on the investment banking where everybody thought that they would. So 1.56 it came in at versus an estimate of 1.45. They did miss on FIC, right? But the beat in investment banking more than made up for it. So they had FIC revenue of 2.74 billion, and then their trading revenue was a really hot beat too, 4.68 versus an estimated 4.53, and then net interest income, which is by far the greatest share of the revenue of all of these companies, makes up 40-ish%, maybe 50-ish%, depending on the bank. Net interest income, 13.86 versus an estimate of 13.81. So just really nice across the board, outside of maybe FIC, but that's a small number. Morgan Stanley, not as hot.
No.
They did just get hired by Iris Energy, though, as their advisor, which is interesting.
As an advisor.
A little bid in that stock today. I don't know. Maybe they're exploring a sale. One of these Bitcoin miners.
Maybe. As far as earnings, that's kind of it for the day. If you want to bring on the calendar. Oh, no, we had UNH. I don't know if you have that chart or if you're You want to talk about UNH? I know it's one of the most important companies in the market, and
Well,
things like
it's
that.
the most
Is it?
important company in the world's most important index.
Sure. Okay.
So that's like being the best player on the best team.
Right.
So
All right,
United
well,
Healthcare is like Michael Jordan in the 90s Bulls, right, Strazza?
I guess.
Strazza's like, what the fuck are you talking about?
Listen, not for me. I get it. You have a special relationship with the Dow Jones Industrial Average. I'm not arguing. I wouldn't call it the most important stock.
It's
I also think it's a
it might not
defensive
be the
stock.
most important stock to Strazza, but for the market,
It's not.
it is the most important stock in the world's most important index. So to me, that would put it in the category in the upper echelon of importance.
Yep.
You know what I mean?
Yeah, the relative trend is no good. I'm just not interested in this one here. Range bound. Did they beat?
Yes,
Looks like
they're
they
up
beat.
3%
Market
this
seems-
morning. It was a beat on the top line and a beat on the bottom line, and their guidance that they gave an update on, it was lower. That reflects the sale of some assets, and they also updated the results of the cyber attack to Change Healthcare, which they own. So a little bit lower on that number.
These guys are getting in trouble recently for their pharmacy benefit managers. You heard about this? UNH, CVS.
I mean,
who's the
I
other one?
know, but I believe it. That whole industry is ripe for
Still happening.
stuff,
Yeah.
shenanigans.
Anything interesting out of the VP stuff yesterday? Like any like weird areas of the market catching a bid?
I have a confession to make. I
Yeah.
watched the movie.
Was it good? I actually heard the movie wasn't
I watched
nearly as good as, not that I've read or seen either, but I
Couldn't help myself.
Did you watch
You know
it
why
last
I
night?
watched it? I'm not gonna lie.
Because I told you about it. I just watched
Was it
I know
good?
it hit me that you had mentioned that like halfway through the movie. But you know what? You know why I watched it? Because it was directed by Ron Howard. So I was like,
Yes,
it's
dude,
a Ron
us too.
Howard flick. How bad could it be?
was it good?
Yes.
I thought it was excellent.
Hey,
I thought it was really good. It's opiate epidemic meets American Dream, so it has a happy ending. I thought
I thought it was
excellent.
good.
Yeah.
I love Ron Howard. So for me, when I saw it was a Ron Howard, and what's her face? Amy Adams is the mom.
She plays the best banged up character.
And she's like really
I mean,
pretty.
she plays
And
this
like
role.
she looks terrible in the
Yep.
movie.
They make her look nasty, and she plays those roles really well. If you've ever watched Sharp Objects, if you like Amy Adams, that was I think an HBO series.
I haven't seen
It's
it.
really excellent.
Yeah.
So
Ron
listen,
Howard
so I
flick.
watched
How
it.
do you not watch it?
Yeah, you got it.
Yeah.
All
You
right.
got to do it. So we watched it like whatever 2 nights ago. Girlfriend comes home from work yesterday. I said, Rose, you'll never believe. Like we watched this movie. We had no idea who this man was. We didn't even know he was a U.S. senator by the time we were done with the movie. And the next day, I start hearing all about J.D. Vance for the first time ever. I'm like, we watched the movie like the day before. She's like, you idiot! It's the algorithm. They just put it in front of us because they knew he was going to be VP. I'm like,
Maybe. I remember that book being wildly popular, and then of course there's always anytime anything gets like blows up and becomes a huge thing, there's always an inherent like backlash to that. Oh, it's not actually, it's overrated because of X, Y, and Z, whatever. As someone that is not from like middle America, I guess I wouldn't know if it was an
Why don't you
accurate
tell the
portrayal.
folks what we're even talking about? Can you mention the name of the movie?
Hillbilly
Sorry.
Elegy.
Hillbilly Elegy. That was his memoir. It came out, I want to say in 2015, 16.
16.
New York Times bestseller list, all that stuff. Again, wildly popular book. Movie came out in 2020, and
The movie's 4 years old?
Yeah.
Oh. I thought it was newer.
yeah. Anyway, that might be your new vice president. As was mentioned earlier, he owns a lot of Bitcoin. So that's the biggest takeaway for me is he owns a lot of Bitcoin.
Yeah, so that's great. That's super awesome. I couldn't be more excited that he's the pick then. Like a out in the open pro Bitcoin person.
And
in office, probably
the
first.
guy that he's interviewing with is the creepy guy from Billions, the creepy compliance guy. Right?
The guy he's
Guy that
interviewing
he's
with? What?
Yeah. The guy
Oh yes.
the
Yes.
guy he's interviewing with for
Uh-huh.
the job is the creepy compliance guy
The
from
lawyer
Billions.
job.
We're talking. Okay.
Which was in New Haven.
Spoiler alert.
New Haven.
Jeez Louise. Okay.
Not the
There,
spoiler alert.
It is for me. Let's move on.
No.
Yeah, that guy's a weirdo. He plays a
He's a great
good weirdo.
weirdo. Yeah.
Let's move on. Can we
So-
talk?
No, let's transition straight to crypto from this. I was
Yeah.
trying to
Oh.
set
It's a
the
good
stage.
transition. The next VP of this country is a hodler.
Right. So
How many
if you
VPs in
thought
this country
that
have been
the
hodlers?
action-
0.0, Mr.
If-
Blutarski.
So this is great. This is big. This is a first for America. If you thought that the price action in the Bitcoin miners was strange yesterday, maybe that explains it. Or maybe these kinds of stocks are just up 20% in a day, every other week, because they're big movers. Let's hit these Bitcoin miner charts, because this was the space that was red hot yesterday. JC, they finally started buying the ones that have not been participating. Cypher's been good for a while. I just want to show this one because this is just super clean. So 5, a little bit north of 5 is your level. Super clean with the shelf of pivot highs from the last 2 years there. I think this one goes back to the record highs this cycle. Next, though, and more importantly, Mara finally getting up off the ground here. Throw up the Mara. I mean, this has been dead money while the other Bitcoin mining leaders have been absolutely ripping for the past couple weeks and months now. Mara's just been holding this level. 19 has been our level for 2 years now. We've traded it successfully off this level. It's always come back. I think we just run it back, right back to the well. The same names. We keep trading them. They keep working. Mara above 19. I think this one's back into the 80s by the end of the cycle. I think there's also a big catch-up move, not just to Bitcoin, but to its peer group, the other Bitcoin miners. And then we got to do this CleanSpark. CleanSpark came into the year as one of like the new Bitcoin mining darlings, right? And then all of a sudden it was just dead money. It's been straight sideways since. You could see drawn in red with the arc here. It's been straight sideways since February, but holding the pivot lows every time. This has been like a beautiful sell-put setup. It's not going to be a top. None of them have been tops, right? So we want to keep on betting on these not being tops. Maybe sell your puts, use the VWAPs, buy the calls, buy the common. These things move a lot. You can make a lot of money just being in the common. I think CleanSpark is set to go again, back above any important VWAP. And then Riot doing the same. We didn't bring the Riot chart, but Riot looks good as well. Now, there's also a development where we talked about these 4 non-tops yesterday. JC, I wish you were here to talk about these 4 non-tops with me. Binance, Ethereum, Bitcoin, Solana. These are the 4 big boys in crypto. None of these are tops. They're reclaiming VWAPs the past 2 days now from the range highs, which I think you could use for confirmation. These things are ready to go. What's more interesting is beneath the surface, I have failed tops that I like even more in the altcoin space. So Algorand, we do not like. This is for illustrative purposes. The relative strength here is simply no good. But this is the structure you want to be looking for. Throw up the algo. I want the shake before the get some, right? A little shake and rally. That's exactly what you're getting in all these altcoins. Look at the big oopsies, right? So we're scooping today. I think we score when we take out that right shoulder high around 20. These setups are everywhere in the altcoin space. I think these things are ready to absolutely erupt. We're going back to 2020, boys.
So I had a pretty decent position in Algorand a few years ago.
Me too.
Algo
Went to
USD.
shit.
Pretty sizable. This must have been like in 22. It was like $1.
This was a hot.
It was like
$1.40,
$1.80, something like that. I had like 200,000. It was like $250,000 in Algorand, right? And I fell asleep watching a movie or something, and I was gonna go to sleep, and I went to the bathroom before going to bed, and I was just checking the market, right? Because I was in. It was a pretty sizable position in like a shit coin, and I was up like $150,000. I think like it was added to like an exchange in South Korea or something like that in the middle of the night. I was like, oh shit, nice. One for the good guys.
100%.
I'll see what it does in the morning. Went to sleep, woke up, it gave it all the way back by the time I woke up.
Oh.
Yeah,
when those things ramp.
It was like $150,000 swing or something like that while I was sleeping. What a bummer, right?
We had a lot of blow-offs.
You could go back and you
in
can see
late
the exact
20,
date. There was like a huge
21.
candle. I could find it, but that was a bummer, huh?
No, that's awesome. But the point that you're making is these things come with a lot of juice. So you can allocate a small percentage of your crypto portfolio. Some of these alts or shit coins, I don't think they're really like hold forever coins, which I would say about something like Bitcoin or Solana.
You see how those
but
things
these are
stay
the
in your
ones you wanna
head? Like when
trade.
we talk about uranium, I'm still traumatized from that Fukushima experience. Like I still have the like. See, I'm like human. Also, you guys think like I'm a robot. I have feelings. I have emotions.
Well, yeah, I mean, sometimes you just have to
I'm
do
very
that with an
sensitive
asset. Like,
sometimes. Very sensitive.
you get mad at me when I'm not interested in your Tesla trades. It's just a no
I don't
touch
give a
for me.
shit.
It's
It's
just a
not my
stock that I
problem
don't
that
trade
you
with.
missed out on one of the best
No, but
trades of the year. It's not my problem.
you don't like to touch nat gas. You don't like
That's
to
not
touch
true.
things too.
I have actually. That's not true. That's not true.
I don't need that test.
As hard as it is to trade natural gas, and they call it the widowmaker for a reason. For some reason, throughout my career, I've actually had pretty good success with natural gas. Believe it or not. There's other things that I have not had success with. Somehow, I don't know how.
Number. Yeah.
Yeah.
Okay.
Natural gas.
Well,
I've had pretty good success with
there you
natural
have
gas.
it.
Not a lot of people could say
And
that,
now
by
we
the way.
Listen, we also have a really, really special report going out on a Bitcoin miner that we especially like right now. It looks better than any of them. It has institutional investors very involved just recently, a big institutional investor. Okay. So that report went out today. Not going to talk about that one on the show, but all of these stocks, JC, look incredible right now. And I think these might be the vehicles for this part of the cycle when it comes to crypto. I really think that. I think the Bitcoin miners have been held down. All these short reports hitting every other week all year, can't knock them down. Now the shorts are about to get absolutely railroaded. We're seeing institutions start to put money into Bitcoin miners. We're seeing investors start to get interested in the AI compute pivot that's going on. There are some fascinating things happening. I think if you could pick the winners in the Bitcoin mining space, there's just going to be so much alpha there.
Can we just finish up with a little TradFi before we go to recess?
We have to talk about. We got to talk about this insider transaction that we got.
Hold on. We will get to. Come on. This is a small cap story, guys.
Yeah,
Regional banks are fucking ripping. You understand that?
The chart.
Russell 2000 is up 2% today. 2% today.
That's
After everything that we've seen over the last week. Regional banks are up another 2% today. These things are ripping. People talk about it's only 7 stocks. People talking about small caps not participating. Bro, this is breadth expansion. This is mid-cycle behavior. This is not late cycle. This is middle of the cycle, middle of a bull market, perfectly normal action. And if you just took the time to look through the actual market instead of just guessing because you don't like who the president's about to be, like you're going to be very confused. Go look.
I love it. So, and to update on the small cap momentum thrust situation, I mean, the reading looks a lot better now when you set it to a 5-day rate of change. I mean, we're back there. We're back there to the kind of momentum that we saw at the pandemic lows. And I think we could see a similar move that we saw off the pandemic lows in the coming months.
All right, give us the, I got a recipe for recess. So give us the insider transaction, Spencer. Give it to me good.
Hit it.
It better be good.
Hit it.
All right,
go real quick.
Real quick.
Bang, bang.
So hot right now.
Listen, we had a couple big ones. I know that Spencer is very interested in the unreported transaction. He's learning how Hot Corner works. Not on our list, but Spencer saw, is it the Starboard value 6.5%? Letter to shareholders. So a lot of times what happens is before the Form 13 or Schedule 13 is required to be filed, the activist investor will go right ahead and just start doing what they're going to do, send a letter to the board, and start doing their activist thing, right? So that's what we got. So they'll self-report a lot of times, right? They let the news know. They want the Journal to report it. They want CNBC to talk about it. They'll send a letter to the board of the shareholders. And then the Schedule 13 will get, I don't know, next week probably. So Starboard value in match.com, if you want to throw up the match chart. I don't know if we have it. Okay. This chart, JC, and things like Zoom, if you look at a chart of ZM right now, I think in this environment, we have to be long these. If something like this hooks higher, the move that could be had from a trading perspective, just a counter trend ripper. I mean, I think I was looking at Unity Software yesterday. Zoom, I'm so interested. I'll probably be in Zoom today. But when I look at this chart, it reminds me of that.
What's the level in Zoom? Don't you want to wait till it gets above 60?
I'm not in Zoom. I said I'll probably be in today. I think we're going to see
I know,
another
but is
ripper
that the
today. I think
number
all these-
60?
I think you could be a little loose with
Match.com
it.
looks
I
just
don't-
like
yeah.
it.
59.50. I would try to jump it maybe above like, the pivot highs from just late
I'd rather be
June.
bougie and
I
pay
don't know.
more on the way up.
59.50, 60. Yeah, listen, if you enter at 59 or 60 and you get the kind of, face ripper that you'd expect from a hook higher off of a pattern like that, it's not going to matter if you,
How about the 200 basis points of alpha coming out today from small caps versus the NASDAQ 100? 200 basis points of alpha this morning.
Into small caps. Yeah.
Smalls versus NASDAQ 100. Yeah.
Again, I'm going to be obnoxious about this because this is a follow-through week, but the big splash from last week, all the thrusty stuff that we talked about, the biggest daily outperformance smalls over large cap tech, we're seeing just huge follow-through this week, right? This trend is continuing. This is the market screaming at us, guys, something is happening here. Something is going on. There's an inflection point in the relative
Rotation. Lifeblood of a bull market. It's not my fault.
JC, this could be the moment where we look back and say, that's where we switched to small over large. That's where we switched to value over growth. That's maybe even where we switched to international over US, right? These are trends. I'm talking about trends that have been in place for 15 years. People aren't ready for this. I think we got to be ready. The market's talking to us.
I'm ready.
Last one on the hot corner. I just want to mention Longboard Pharma. This is the biggest one today. This is really the most important one. LBPH, pull this chart up. Oh my God, there's not a hotter biotech right now. This, maybe Viking. This and Viking. So hot. And then, was it Viking Partners actually who came in and took the stake? We had an original filing. I think it was Viking
Global
right?
Investors.
Yeah, Viking Global.
No relation.
The Tiger Cubs. The Tiger Cubs are everywhere on our hot corner lately.
Are these
I'm loving the
Cubs,
Tiger
really?
Cubs. Oh yeah, Viking Global's good stuff. Good stuff. What's Andreas something, isn't it? Andreas Halverson? Yeah. Anyway, original filing, so brand new position, in excess of 5%, and this chart's just been absolutely ripping. Had a little bit of a squeeze dynamic going on. It just kept going. Now it's probably going to be up today here on this news. Marginally. The biotechs look good is the bottom line, and institutions are picking up on it, and they're joining this party in a big way.
All right. Here's your recess, JC.
Do it. I sent you the recipe in the Slack yesterday and a picture of my steak. Get yourself some skirt steak,
Right.
okay?
Yeah.
Skirt steak. And if you want to put it up, it looks delicious, and it was.
Was I expected to put this in the deck? Because I didn't.
No, you don't have to. Get yourself some skirt steak, and then you're gonna go soy sauce, rice vinegar, sesame oil. Get that like chili paste, the spicy chili paste. Throw a bunch of that in there too. Get some brown sugar. Throw that in there. I like some additional fresh garlic. Throw that in there. Black pepper. Some green onions. Chop those up. Throw those in there. Save some to finish on top after, right? So some for the marinade, some for after. And just let that sit overnight. Throw it right on the grill. Just pull it out of the bag. Throw that shit on the grill. Get a nice char because you're going to get that char because of the brown sugar that you're putting in there, right? So you're going to get that good char going pretty quickly. I don't know that I make anything this good. It is incredible how good it is. And if you want to get gangster and you got like some sesame seeds, you want to throw that on top too, you feel free to do that also. So good, like insane. Remember that pork we had in Baltimore, Spencer?
Yeah. Do I remember the pork we had in Baltimore? Yeah, man.
I've been thinking about it ever since.
Me too.
So this is a very similar recipe, but it's on a flank steak instead of on the pork. But you could just use that.
I do love a skirt steak.
Who doesn't?
Yeah.
And skirt steaks are great for marinating because they got like those what are those called? Like those wave things inside. What are they called? Like the veins or whatever. Not veins, but the cracks.
JC's really good with the meats. You do a nice job. You do great work.
I dad hard these days, dude. So hard.
I know.
I'm getting a new SUV. I'm getting the XL.
You're going even bigger.
I'm dadding so hard.
Well, you have isn't big enough.
Spencer was in the car the other day in Baltimore. He's like, this thing's a beast. Yeah, well, I'm getting a bigger one. Not my choice. I didn't want a bigger one, but my wife, not going to fight her on it.
Your car is definitely not big enough now, JC. Definitely not. Okay. We got to go. We got spaces in an hour. We got chart request live. If you have a specific request for us for this show, this show is not the venue for that. The venue for that is chart request live, which airs on this channel at 1 o'clock Eastern time every Tuesday and Thursday. You can show up live, drop your ticker in the chat. We'll talk about it, or email your request in ahead of time. Questions at stockmarketmedia.com. Thanks to our guest today, Douglas Boneparth. Thanks to all you for hanging out. What do you got?
It's probably a great day to take profits in the banks. If you traded these things off the range lows we've been talking about on the show for the past couple of weeks, you got to your target and then some. Don't be greedy. It's probably a great day to take some profits.
All right. See you guys. Go make some money.
Adios.
Later.
I can't take no